Okay, let's dive right into this. Welcome to this PINE+RAIN Studio Explainer. So look, we are currently living through literally one of the most astonishing periods of capital investment in human history. And honestly, it's happening right under our noses. I mean, we usually hear about AI as just software, right? The chatbots, the image generators on your phone, but behind the screen, there is a massive physical reality being built that is just mind-bending. Today we're going to look at the hard data, the actual jaw-dropping dollars being spent to really grasp just how massive this infrastructure build-out actually is. I want to hit you immediately with this insane figure, $342 billion. And to be clear, that's not the total value of the AI industry. No, this is purely the capital expenditure from just 5 big tech companies, the hyperscalers, in the year 2025 alone. Think of these guys like the massive digital landlords of the internet: Amazon, Google, Meta, Microsoft, and Oracle. $342 billion being poured directly into the physical, concrete, and silicon foundations of artificial intelligence.
And that's just in one single year. To really grasp the sheer velocity of this, you kind of have to let that time frame sink in for a second. This isn't some cautious, decade-long budget. This is a 12-month, all-out spending spree to grab the land, the power grid connections, the cooling systems, and all those highly specialized chips needed to run the future of computing.
Section 1. The AI spending explosion, looking at the scale of hyperscaler capital.
Because believe it or not, 2025 was really just the warm-up act. The projected AI-related spending figure for 2026, $527 billion. We are looking at a staggering year-over-year acceleration. It's essentially an all-out arms race right now. The thinking is basically, whoever builds the biggest, most efficient computing infrastructure is going to control the real estate of the entire next technological era.
So you might be wondering, where exactly is all this money going? Well, a massive chunk of that corporate spend goes into building new hyperscaler data centers and expanding compute clusters. If you think about it, these are basically giant, ultra-powerful digital factories built specifically to train and run generative AI. They are colossal, and they are notoriously power-hungry. But hey, it's not just the big public corporations making these huge moves. Venture capital is hyper-concentrated right now, too. Case in point, in April 2025, a startup called Safe Superintelligence raised $2 billion at a $32 billion valuation. That is a gargantuan amount of private capital backing a single, highly specialized venture.
Moving on to Section 2, dwarfing the moon landing. This is our ultimate historical anchor. To really wrap our heads around numbers with this many zeros, we absolutely need a solid point of comparison. Let's look at the Apollo moon landing program. You know, the legendary multi-year effort to put humans on another celestial body. By 1973, that cost roughly $25.4 billion. If you adjust that for inflation to today's money, that entire 14-year program cost about $280 billion. Now contrast that with the forecasted AI tech investment for just the single year of 2026, $527 billion.
Let that sink in. In terms of pure purchasing power, the U.S. tech industry is essentially funding the entire Apollo program nearly twice over, in a single calendar year. We're literally pouring more capital into artificial intelligence infrastructure in 12 months than the nation spent to invent, test, and launch the rockets that took humanity to the moon over a decade and a half. It's wild.
Let's look at Section 3, Historic Megaprojects v. AI, where we'll do a data deep dive.
Let's broaden that historical context a bit and look at some of the other defining megaprojects of the 20th century. Quick note, all these figures are adjusted for inflation to 2026 dollars. Take the Marshall Plan, the initiative that literally rebuilt Western Europe after World War II over 4 years. That tops out at an estimated $210 billion today. Even if we jump to the peak of the dot-com bubble in the year 2000, peak VC investment was maybe 150 to 200 billion in today's money. So that 2026 AI forecast of $527 billion, it easily, comfortably eclipses the most aggressive spending sprees of the last century.
And it gets even crazier when you break it down by individual companies. Think about the Manhattan Project. It's often cited as the absolute gold standard for high-stakes, rapid scientific investment, right? Well, developing the atomic bomb over 4 years cost roughly $35 to $50 billion adjusted for inflation today. Right now, as we speak, a single tech company like Microsoft or Amazon spends more in just 1 year on their own individual AI capital expenditures than the U.S. government spent on the entire 4-year Manhattan Project. One company, 1 year.
The impact gets even more jarring when we map out these timelines side by side.
Look at the interstate highway system. That was a $600 billion endeavor in today's money, but the effort and the spending were spread out over 35 years. The current AI infrastructure build-out is attempting to reach that exact same level of capital intensity, but aggressively compressed into a tiny 5 to 10-year window. We are talking about a massive, heavily concentrated shock to the global economic system.
Which leads us to Section 4, Private Capital, Public Impact, and the Shifting Funding Paradigm.
Because there's a huge, fundamental shift happening here in how these historic endeavors are funded. The megaprojects of the 20th century, Manhattan, Apollo, the Marshall Plan, those were taxpayer-funded, government-directed initiatives driven by national and geopolitical strategy. This modern AI megaproject, completely different. It is being driven almost entirely by private corporate wealth and venture capital markets. The driving force isn't national defense, it's the pursuit of future profits and outright market dominance.
And because it's entirely private, it creates a totally different relationship with the broader economy. Get this, in 2025, a massive 37% of real US GDP growth was driven directly by AI-related categories. That means over a third of our entire economic engine right now is heavily relying on this private spending continuing at pace, which naturally raises some very serious questions for all of us.
Section 5. Bubble Fears and Monetization Risk. Let's talk about the economic catch.
You see, whenever you have an unprecedented amount of money moving this incredibly fast, you are going to have unprecedented risk. And this is the million, or honestly the trillion-dollar question economists are asking right now. Where are the broader productivity gains? Critics and impartial analysts looking at the data are pointing out a pretty glaring disconnect. On one hand, we have record-breaking historic levels of cash going out the door to build these data centers. But on the other hand, the measurable increase in economic productivity, as in companies actually doing things faster and cheaper because of AI, is currently lagging far, far behind the hype. So the absolute crucial point to understand here is monetization risk. This is the very real concern that the revenues generated by selling AI services simply will not grow fast enough to justify this unbelievable mountain of capital being spent on the hardware. It's kind of like a developer taking out a $1 trillion loan to build the most advanced sprawling shopping mall in human history, but nobody has figured out what stores to put inside that can actually pay the rent. If these tech giants build the most advanced computing infrastructure in history, but nobody can figure out how to make enough money using it, yeah, that is a massive problem. Because honestly, this is the figure economists are really sweating over right now. $5 trillion. That is the staggering projected cost of the data center infrastructure currently planned across the industry from 2026 all the way out to 2030. The stakes quite literally couldn't be higher. This is private capital placing the single biggest financial bet in the history of human industry. Which leaves us with this final provocative thought. Are we building the architecture for the next great leap in human capability? A digital infrastructure that's going to pay dividends for generations? Or, without those immediate tangible productivity gains to back it all up, are we just inflating the most expensive economic bubble in history? The spending is very real. The data centers are being built right this second, but the ultimate legacy of this megaproject is completely unwritten. Definitely something to think about as you watch this space evolve. Thanks so much for joining me on this explainer, and keep learning.